China's banks face mortgage losses of $350 billion in a worst-case scenario as trust in the country's real estate market plummets and officials battle to keep the rising unrest under control. Mortgage boycotts and frozen bank accounts are the two main problems threatening China's societal stability and are being addressed in an effort to calm the public. Why is China experiencing a major financial crisis? And what are its strategies for reviving the Chinese economy? How will ongoing protests affect China's future, given that the country is already facing a recession? The Communist Party of China is worried about the most recent developments there. In an effort to put pressure on the CCP and banks to treat them fairly, thousands of prospective homeowners supported a movement to stop making mortgage payments on their homes. Many of them have the means to pay but opt not to. Over the frozen bank deposits, there has been a large-scale demonstration. Numerous cities saw protests start up, and the crusade seems to be gathering more and more momentum each day. There were hundreds in Zhengzhou. Many of them have started delaying payments and demanding compensation. Construction stops, mortgage stops, deliver homes and get payment. Disgruntled flat buyers in China used that chant as one of their chants during a protest, but they went beyond signs and chants in their outrage over unfinished houses. In China, where dissent is not allowed, many of them stopped making their mortgage payments, which was radical. Protesters in Zhengzhou, Henan province, started a large demonstration that was brutally put down by police. It was the largest protest to date by the depositors, who have been battling for months to get their frozen savings back. The revolt has alarmed the authorities and drawn attention to a market already under pressure from a sluggish economy and a severe cash shortage. More concerningly, it has indicated a lack of faith in one of the main pillars of the second-largest economy. The think tank Oxford Economics stated that mortgage boycotts, driven by deteriorating sentiment toward property, are a very serious danger to the financial situation of the sector. The CCP is so concerned that it has already dispatched tanks to maintain stability. For the first time, the CCP is now genuinely concerned for its survival, and it all has to do with China's real estate bubble. Thousands of security personnel soon showed up, accusing the local cops of using force against them. The cops would rush over by the hundreds, regardless of whether they were males, females, the elderly, infants, or even those with disabilities. Grab someone and kick and punch them. Large Chinese banks are in danger. If the situation worsens, over $9 trillion in loans are in danger of defaulting, which could foretell the demise of China and the CCP. This mortgage crisis isn't the only crisis the CCP is dealing with. The vulnerable Chinese economy is also greatly endangered by zero-COVID policies and bank deposit scams. But the greatest danger comes from the mortgage situation because it involves trillions of dollars. Some of the most important industries, including banking and real estate, are involved and have an impact on millions of families nationwide. Fun fact: the wealthy people of China continue to spend on luxuries despite the country's ongoing financial catastrophe. In 2021, Chinese consumers spent $73.6 billion domestically on luxury products, up 36% from 2020, according to a study by Bain & Company. This indicates that even though a large number of Chinese citizens are experiencing financial hardship, a sizable portion of the population still has extra money to spend on expensive goods. The importance of owning a house in China has only increased in the last few decades. Real estate is one of the assets that the public trusts more than anything else. Owning real estate has significant cultural importance to the Chinese people. Families invest in real estate as a way to plan for their retirement. Real estate owning men are viewed as desirable candidates for matrimony. Your social status in society is directly correlated with the quantity of real estate you own. When you take all of this into account, it is clear why real estate values have risen over time. In China, real estate companies are permitted to sell houses before they are finished, and customers have to start repaying mortgages before they are in possession of the new property. The developers use these funds to finance construction. More than 300 projects are boycotting mortgage payments until construction resumes in China. Tens of thousands of people have voluntarily defaulted on their mortgages in hopes of getting the government's attention. Additionally, people have taken to the streets to protest these construction delays. These 300 projects presently represent more than $100 billion in debt held by China's major banks. Some major developers also defaulted on their debts last year. This is not a good sign for China's banking institutions. What should concern banks and the government the most is not just the possibility of a $100 billion failure, but the fact that more and more people are joining the boycott. A well-respected expert has predicted that the current mortgage crisis could be 100 times worse than the one American banks experienced in 2008. The CCP has already ordered banks and news organizations to cease reporting on mortgage boycotts. Party leaders are exerting every effort to kill this report. Therefore, the CCP censors are working extra hard to censor any articles and videos that spread the truth in order to keep the news under wraps. Chinese banks are in an existential dilemma as a result of these boycotts. The fact that the majority of these loans are collateralized by houses that are not yet built is one of the key distinctions between the situation in China today and that which American banks faced in 2008. Therefore, banks are unable to simply seize the home when a borrower defaults and cuts their losses. Banks are being compelled to bear these losses, and if defaults continue to rise, there is a possibility that major banks may fold. Chinese banks are currently a house of cards. One of the big four state banks in China has already limited people's withdrawals. Banks typically lend the money that customers leave in their accounts in the hopes of making a profit by charging interest. Usually, the central banks determine the reserve minimum. Let's assume that it is 10%. This means that whenever banks receive $100 in deposits, they are only required to hold $10 in the vault and are free to loan out $90 while charging interest. This is a very simplified example, but this kind of economic activity occurs millions of times every year. In essence, this is how the modern banking system functions. Banks are able to produce about $1,000 worth of money in circulation for every $100 in reserves. This method is excellent right now. This fractional reserve banking has contributed to a great deal of economic development over the last century. However, this method can only function if depositors have faith in the bank's ability to protect their funds. This confidence begins to erode if too many of the loans that banks are making turn out to be worthless. This is the reason the USA passed stringent lending laws following the 2008 financial disaster. Banks therefore exercise caution when making loans. Due to the economic downturn, many individuals have become lone wolves. Currently, a growing number of homebuyers are making defaults on their debt. Chinese banks are also at risk of losing the trust of their depositors. Limiting withdrawals will not help with establishing confidence if too many people start taking their bank deposits out of the banks. Afterward, there is a bank run which results in banks collapsing. This is where the big headache lies for the CCP. The Chinese economy is heavily reliant on its financial sector and the real estate sector. A contagion crisis is affecting the Chinese economy. Banks are in the middle of it all, according to Qiwu Zhen, a finance lecturer at the University of Hong Kong Business School. They would suffer much greater losses if they didn't assist the developers in finishing their projects. 7 of China's top 10 corporations are financial institutions, and real estate accounts for about 30% of the country's gross domestic product. As the news of these boycotts spread, the CCP called an urgent meeting with the banks to discuss the rising risk of these defaults and how to assist the ailing developers. The CCP is thinking about injecting more than $1 trillion into real estate firms so they can complete these projects. Beijing is giving financial and social stability top priority in response to headwinds such as slowing economic growth, COVID disruptions, and record-high youth unemployment. Efforts that have been contemplated so far include a grace period for mortgage payments and a fund supported by the central bank to provide loans to developers. In either case, banks are anticipated to play an active role in a planned state bailout. Thank you for watching this video about China's financial crisis. It's critical to consider the long-term effects of this crisis for China as the country experiences economic turmoil caused by bank failures and nationwide protests. What do you think needs to be done to address this crisis and prevent it from worsening? Share your thoughts in the comments below. Don't forget to like and subscribe for more updates on global financial news.